guys, let's go over price action for gold New York session. I will try my best to start recording, London session because that is something I'm trying out as of recent, but I don't want to start recording till I know I have something to show first. But so we're on the daily time frame. As you can guys can see, we have this small candles there. It just feels like the candles are ranging right now. I said raging, ranging right now. So these are all the price action we can see on the daily time frame. But we can all tell from every time we range, we get a huge push to the upside. So eventually, a huge push should be coming pretty much soon. But that's the daily time frame. So this is Thursday, which is today. This is Wednesday. So we're going to use Wednesday's price action. So Wednesday's low and Wednesday's high. That's, okay. So if we go down to the 4 hour, we can see the price action that happened. Sorry, I forgot to say something. Okay. Let's go back. So this is Wednesday, and as you can see, Thursday when Thursday happened, Thursday took out Wednesday's low. So more than likely, we had a huge push. We were more bearish than we were bullish today. So that's one of the good things about knowing how the daily bias is. If the candle takes out the highs, you know we're looking for buys. If it takes out the low, you know we're looking for sells. So we saw the 4 hour already. Let's go to the 1 hour. Okay, right there. Wednesday's low, Wednesday's high. 30 minute. Okay. And just by looking at this, you can start to see some things that happen over here. For example, on the 30 minute, breaker structure happened right there. People who took trades from this order block over here, this time frame. I mean, for me personally, it's too big of an order block. I mean, if you took a trade on there, put your stop loss at high, you'd have won the trade, whatever it was. I mean, it's just, I mean, look at I don't know if you get a 1 to 2. Yeah, a 1 to 1.65. But, your higher time frame, better analysis. So I guess that's the 30 minute. As you can see, 30 minute held. So as long as you go down more time frame, you get to see more of the stuff. So 15 minute, you can see breaker structure properly, and your stop loss reduces, and of course, you know, you get more risk to reward. Exactly. Look at that. From 1.65 to 1.27. And of course, the lower you go on the time frames, it gets a lot better as well. So that's what we're looking at. I'm gonna go ahead and cancel this. So we can see everything proper now. See, if you've got it right there on the 5 minute, stop loss over there, 40 ticks, 1 to 4. So you're risking pretty much two. Let's see. If you went in two contract, would you risk? No, that's too much of a risk. Let's go one. So $400, you're making 1,800. That's a great risk right there. So this is 1 to almost 5. Um, but that's the thing about scaling down in time frame. You get to see your risk properly. You want to know what you're doing. So let's go down to the 2 minute because that's more like what we're going to be using. So let me go ahead and turn this on. So this is my trading session indicator that I have. It lets you know the session so you can adjust them to, as you can see, the time zones. So you can use this to back test the day and see what you could have done better. So just by looking at this on the 2 minute, we've gone down from, we know we're bearish, so we're looking for short just by looking at the daily time frame. So let's go ahead and draw our lines over here, okay? So this is clearly a strong breaker structure to the downside. Okay, POS sell side. One of the good things about gold is you don't really necessarily, I guess you can scalp if you want to, but more than likely you're just mostly looking for order block trades and trying to just catch, a trending market. You're not really looking to trade in too much of a range market. It's kind of hard. So first thing we notice, so we see this push that happened over here, right? So before 8:30 today, because of all the small candles, all this huge bearish, we can call this the order block right there. So we see the market doesn't come back to test and no. Something like this, we go in and use our Fibonacci retracement too. So you draw it from the low all the way to the high. As you can see, the market gave us a 50% retracement. So if you were impatient, sometimes like me, you could have gotten right there, just trailed and stuff like that, and probably got out right there for 24 ticks. So if you went in one contract, you made like $240 because every tick is $10 on gold. So stuff like that happened. You would have made a small profit, and you had to know what's it called, a breaker structure again that happened right here. Um, You could use this for your order block, but more than likely I want to get lower price, so that's going to be my proper order block for me. So let me draw this perfectly. If you guys can't tell, I'm a little bit of a neat freak. I like my chart to look clean. I like my chart to look a certain way. I don't know why, but so we can see same thing happen over here. We had a break of structure kind of closed above, so this was a tricky one. I think if I was looking at this without the forecast now, I probably would have taken a buy here because I would expect the market to continue, even though that goes against my bias because we know we were bearish for the day. So I would have lost this trade of what's it called 22, so about $220 on that trade with one contract, which is fine. Then we go back and look at the daily, so we know we're bearish for the day. Then good, we have this break of structure over here because now this one overall lines with the what's it called this one lines out with the overall bias that we have for the day, which is bearish since the candle took out the low on this one. Now this one would have been a harder one to take because never mind, sorry, order block is right there. Got in right there. Stop loss on over here at 37 ticks. Damn, that's $370 in one trade. Because remember it's $10 per tick. So if you target this whole thing, which is a 1 to 4, this low over here, you'd have made let's do the math. So you're looking at if you win in one contract, $307 on the trade, you risk 300, you'd have made 1610 on that trade, which is good risk. It's not bad at all. So that's one of these that we're looking at over here on this trade. So order block held on that one. Market never came back to retest this order block on this one over here because we had that break of structure over there. Okay. Okay, break of structure happened over here as well. Market doesn't come back to retest it. If anything, market just comes back and plays around. So we had one loss, one win. So what are we? Oh, sorry, we're looking for the retracement too. So from right there. Okay, so this is the 50% move. We don't see anything. The only thing we see is the market plays, uses order block, pushes back up. Then we have a break of structure that happened right here on the 50% retracement. So let's go ahead and take that out. Okay, going in on that trade over there for a short stop loss over there. More like we're targeting this low, then we're trying to catch a 1 to 2. So as you guys can see, 1 to 2 doesn't happen. So if I was looking at this, my stop loss went from there. Probably trade my stop loss here, then here, and hopefully the market comes back to retest this and push back down. But as you can see, that's not happening. We lost 12 ticks on that trade, so $120 after we won at 16.10. So we still have some room to play around. Then we have the sell side over here. Sell side over here. Now this is going to be an overall buy side. So you guys can you see how clean the chart is? Can you see how you know where all your opportunities are in the market? I mean, it just shows you pretty much clear chart. So we have this that happened over here. Breaker structure happened. Okay. This was a good trade over here. We didn't break the high, but I mean, you can kind of tell. I mean, I wouldn't call this an A sub because I mean, this isn't aligning with everything that you want, but you call this a B or C sub. So if you went in on a trade right here on a limb, so on this trade, you shouldn't risk too much. If anything, you should risk lower than usual. So 9 ticks, so you're risking $90 on this trade over here just to see if it works out. So yeah, you're risking $90 on this trade. If you catch a 1 to 4, you're making one 380. I probably would have gone in to risk 180 on this trade and make 760 on 1 to 4. So this is not a bad risk at all. So like I said, it just comes down to knowing how much you want to risk on this trade. For example, on this trade, if you normally risk 500 on a trade, why would you risk 500 this trade when it's not break structure and doesn't come back to retest? Something like this, you want to risk far less if you lose this because this is not an A setup. So this is one of those things you have to keep in mind over here. So this happened over here. Then we had this order block over here. Market never came back. Or something like this, you can go ahead and use your Fibonacci too. Okay, as you can see, market came back to the 50 50%, pull back 50%, then you can go ahead and just count the candles down, 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 down. This is an up bar. Okay, something like this as well. You would be careful at this. You wouldn't go if you usually risk 500, you risk like 180 on the trade as well because it doesn't give you a whole retracement tool. So you go in right there, stop loss underneath the low, 140 on this trade, which is perfect. If you're going for a, what's it called, a 1 to 2, right there, a 1 to 2 on this trade. So, and the good thing about this is since we didn't get an order block trade, we usually trade our stop loss by every bullish candle. So as soon as every bullish candle closes, so we got in right there on this candle. As soon as this candle closes, let me go. Let me see. So create limit. So we're risking $140 to make $280. That's not much, but that's something. I mean, I know people that work, go to work, make $280 a day or in 2 days or whatever it's called. Except you're in sales and you make more commissions if you sell cars or whatever. I sold cars previously, but that's rubbish. I'm just renting that. But so that happens, like I said, a 1 to 2 and something like this. You just trade your what's it called? Your stop loss by every bullish candle. So you got in right there. Stop loss as soon as this candle closes. Stop loss is right here, right there, right there, there, right there. Yeah. There you go. So the market would have taken you out right there since you were just, I guess you can call this a scalp because, like I said, it's not a position where you get in on an order block and you just hold a trade. So stuff like that happens. I mean, look at this is all the price action we saw today. Honestly, this is all the price action we saw today in the market. You see how clean it was. Nothing too crazy to it. You get to just, I mean, it's beautiful. Well, I hope you guys liked it. Like I said, I'm looking forward to start, making some more London session trades for gold, so that way we can trade it together, kind of see if we can understand. It's kind of make some money. Please like and subscribe. It helps my channel out. If you have any questions, please leave some comments below. I'll try to answer them to the best of my knowledge. I am not a financial advisor. I'm just trying to figure out the market like you guys and make some money. Thank you guys so much. Bye.